Resource sector is mixed. Welcome to Kitco Roundtable. I'm your host, Michael McCrae. I'm here with Paul Harris, Kitco correspondent. Welcome, Paul.
Hey, Michael, how are you?
And Kai Hoffmann, glad to be doing this with you at the Vancouver Resource Investment Conference on the last day. How you doing?
Not too bad, but it's been the last day. So let's see what kind of answers I'll be able to give you.
I was saying that it is mixed right now. We have a lot of, how would you say, cross currents that are happening within the space. We are the last day at the Vancouver Resource Investment Conference. How would you say? I've seen bigger conferences in the past, and I've certainly seen smaller conferences in the past. You're talking to the juniors in the space, and you're going around and they're saying, you know, I just survived 2023. I am just hoping that we're kind of getting better down to a 2024. We did, however, start the year with some good news. We saw some notable financings, particularly some sectors where we wouldn't expect to see them. And I'm thinking about the FPX Nickel, where they saw the investment that came, I believe, from Sumitomo. And then after that, we had Canada Nickel, which seems to be doing a whole bunch of transactions. Solaris Resources, I think it was $100 million plus for their copper project. That was from Zijin as well. So mixed sector here right now. Now, Kai, I'm going to tease you out because you have the numbers and you can tell us exactly what's happening. But I'm going to go with impressions first. I'm going to pick on poor Paul here. Paul, what has been your impression? Same?
So you're going to set me up so I'm going to be knocked down. Okay, let's run with that. Walking around the room, speaking to people, it seems that the mining sector, the exploration sector is in a recession. It seems the financing window is closed despite the fact that gold is forming a bottom over $2,000 per ounce. Money's not coming available. And I think that's perhaps in light of the comments you made about the finances that have happened, there's perhaps a bifurcation coming between the haves and the have-nots. There are going to be those companies that can access capital, have very good CEOs that really get out there and shake the can and get results from that. But the majority are going to come up dry.
Kai, you have your other hat, which is Oreninc as well, where you do actually follow the financings. And we've talked about this in half of 2023. As bleak as 2023 was, it actually wasn't that bad. So bring us up to date. What was the end of the year picture? What did we see?
It was actually better than 2022. So that was the big surprise for me as well, compiling data for the presentation here as well. Because I don't look at our data on a daily basis either, but compiling it on a year-end basis, we raised more money in 2023 than we raised in 2022. $4.6 billion in our coverage universe. Yeah. Keep in mind that's companies' market cap below 1.5 billion and financings below 100 million Canadian dollars. So really the junior end of the market, but it's bifurcated. Exactly as you said, it's the haves versus the have-nots. I'd add to that, it's the companies that have a plan and a target and a goal versus the companies that are just full of hopes and dreams, right? Meaning going out to Alaska, trying to drill a target that is an idea, won't work. But if you want to advance to a feasibility study or a resource estimate, you'll have a very high chance of raising that capital, in particular when you have a good management team. And that's what we're seeing right now. FPX Nickel, very desirable project, going to feasibility stage. SolGold, I think we've seen. Solaris, sorry, that was Solaris.
Yeah, they got 130 million to deliver PFS and advance certain aspects.
That's exactly what we're seeing in the markets. If you have value, value target, you'll get the money.
Sorry, break that down a bit more. We say value, but are these late companies right now, or what is it?
That's exactly that. So it's late stage explorers, early stage developers, companies that are trying to achieve, as you said, PFS, a DFS, a definitive feasibility study, or just even a resource estimate at a later stage, right? To update a resource study, the companies or investors can track. Those are the companies that create value. Again, if you go out with hopes and dreams, trying to raise money for a grassroots exploration program, tough luck.
I'm here to remind you that Snowline Gold is a sponsor of Roundtable. Snowline Gold, ticker SGG on the TSX Venture and SNWGF on the OTC, is a greenfield gold explorer advancing the 330,000 hectare land package in Canada's Yukon. Snowline's 2023 exploration program delivered some of the industry's top results, including one of the Yukon's best ever drill holes in its 125-year history. Upcoming catalysts include plenty of news flow and the announcement of the 2024 exploration program. Visit snowlinegold.com to keep up to date. Snowline Gold, ticker SGD on the TSX Venture. That's Snowline, and we thank them for their support. Now back to the show. There's two commodities that I think are kind of shining over top of us right now that people are tracking the trends for first, and this is the one that you track the most with what you've been doing with your YouTube, and you've been trying to tease it out. That would be gold. Gold it's been very interesting because we hit that all-time high back in December. When I look at the GDX though, which is a tracking of the gold miners, we're close down 10% for year to date. And what is it? It's the 22nd right now. You've been talking to a lot of people in the space, Kai. What's going on?
Good question. I think a lot of people are still trying to figure out what is going on. Where's the lack of interest in this space? Because we're seeing a lot of, we do see margin compressions of the majors, the producers. That might be a reason for some of the algorithmic generalist traders and investors. Yeah. But overall, like, gold should be in everybody's mouth. Everybody should be talking about gold. We've broken all-time highs. I barely saw a headline. Yeah. Like, it was actually, I saw headlines that were next to Bitcoin as well. So I think there's that bifurcation on that end as well. If you're looking for an alternative to the US dollar, if you believe that the narrative of de-dollarization and US dollar losing value, you look at gold and Bitcoin, so you're losing half the investors perhaps. And the investment funds are not coming in. Like, we're actually seeing funds in the space being dissolved. Yeah. There's ASA out of San Francisco that's being under attack by an owner. I hear rumors of another fund here out of Vancouver, $160 million fund being closed as well. I want to name the name. I need to verify the rumor. So that's the pressure. That's why we're not seeing any movement in the shares, because there's a lot of liquidation. A lot of the funds are seeing redemptions.
Well, correct me, Kai, because when I'm talking to people that are in the gold space, and the one thing that they're hanging their hat on right now is they're saying, we have to get to the point where they're cutting interest rates, and that point animal spirits, and then that point people are going to be taking a flyer and stuff like that. But that's not the gold narrative, I think. It's supposed to be counter-cyclical. I don't, it's like, we're going to go up when tech stocks go up or something like that.
Yeah, well, you look at it as like you believe that the Fed might ease rates, and then QE might be next, so quantitative easing, maybe free money again. Okay. We'll see what breaks next. Yeah. But then the inflation narrative kicks in again, so you're trying to protect your wealth because the US dollar is going to be worth less. So gold should be hanging in there or going up in a particular scenario. Mm-hmm. And that's sort of what we're seeing. That's why gold is hanging in there right now. Of course, we see central banks around the globe buying as well. Grant Williams, who I interviewed earlier, said it's a national security asset, which is a very interesting way to form or name gold. I'll be using that probably forward quite often, so you might hear me say that in other interviews quite often as well, because I like it. It makes sense. It protects your wealth. US dollar has been under attack from other countries as well, and they're protecting themselves.
Other story is copper. Copper. Everybody's talking about this is going to be the next metal that is supposed to run. Paul, you've been looking at copper fundamentals. How is it looking?
Well, the opportunity. I mean, it's real. It's real. There's a big supply gap coming. Yeah. There's the inability of the market to fill that gap with the existing production because mines are getting older, grades are declining, it's getting more and more expensive, there's fewer discoveries, there's nothing in the cupboard to bring into production. So sooner or later, the prices have to rise to encourage, to stimulate, to incentivize new production. Mm-hmm.
We saw, I asked you this off camera, Paul, but we saw the big run up in lithium, the lithium space, and then we saw there was lithium juniors galore right now as well too. I have been talking to a lot of copper juniors who are being introduced to a lot of them as well too. But are we at that same stage right now?
Not at all. It's very different. A couple of years ago, a number of new copper juniors started, and if you look at the data out of Chile, copper exploration in Chile increased last year for the first time in about 3 or 4 years. So there is more exploration starting for copper, but there's far fewer companies doing it. One, because it's not the flavor of month. You don't have the trend aspect that the lithium explorers do. Plus, it's so much harder. It's so much harder to actually find a deposit, to stake the ground, to do all the exploration you need. It's a much harder task. I'm not saying that lithium exploration is easy. Once you've got a project, within 5 years, you can have your resource defined, and then you're going through the rest of the process. A copper deposit, you're looking at 10 or 15 years of exploration before you can put a resource around it and then go into the rest of the process. So it's a much harder task. You need perhaps much more knowledge to engage with the exploration process.
We've been a long way also from the incentive price because we need north of $4 to actually see that people are they're going to have to feel comfortable that we have that built in so we can see some projects actually develop. So the longer we stay away from that, I mean, the more of a potential copper gap. Sorry, I can't come up with a clever word on your opportunity. I was trying there. The longer that we stay away from actually seeing some mines built, so the potential that there's going to be a bigger gap.
Absolutely, because a really difficult thing to judge or time. Timing is everything in the mining space and in the mining investment space. But in copper particularly, you're looking at let's say a 20-year time horizon between discovery, delimiting a deposit, going through the economic studies, going through the permitting. Who knows what's going to happen or what the prices will be in 20 years. That's a really tough call to make. So companies, I guess, going with their best efforts at, looking for something that's big enough that it will hit a couple of cycles. So at least a couple of points in the life of the potential future mine, they'll be able to coin in the money when the price is at the top of the cycle.
Go ahead. Just jump in there as well.
Yeah.
Like short to midterm, we're seeing recession fears looming on the copper trade as well. We're seeing less investment in the copper space. Earlier in the year, in 2023, we've seen quite a bit of investment in the copper space, but since then, copper stocks have traded down. Nobody wants to touch a copper stock right now because everybody sees a very hard landing scenario, and that's maybe hinders some to development as well.
Yeah, I've heard the same story coming out of talk to newsletter writers, and it's a sample group of a handful, but everybody's saying that your copper story is still like a couple of months off, if not to 2025.
But you've also got the fact for copper producers, times are good. $3.70 per pound historically is a very high copper price. Most good producers have probably got a C1 cash cost of $1.50, $1.75. They've got a very good margin. So whilst they're in a wait and see mode about potentially buying other companies, potentially investing in new capacity, they're making good money.
It is the start of 2024. We're here at RIC, which is the kickoff to the season, the first big show. I wanted to ask you both, what are the top stories that you're going to be looking at? I'm going to kick it off and talk about that we are in a US presidential year, and I want to see how much of energy transition is going to become a political football. We have, how would you say, we have a US presidential election. It looks like it might be Donald Trump versus Biden. That was behind the Inflation Reduction Act. And we see that there's a lot of energy transition that has been supported by government policies. We also see a lot of PowerPoints from juniors that actually kind of lead at the top, talking about energy transition and the opportunity in there. What are we going to see on that? Is that something that is going to be scaled back? And then also, if there's a change, how much of that energy transition policy is going to be knocked off, and what is going to be the knock-on effect to the sector?
It's interesting, a lot of companies mentioning it, but a lot of companies are not even eligible to talk about it in that regard. They're not grant eligible, for example, so a lot of companies are eyeing that big money that the US might be doling out, like they've done to Talon Metals. But they need to be somewhere closer to shovel ready, or need to be feasibility stage, or get to feasibility stage to be even eligible. So a lot of the junior miners, explorers, who have that critical package and energy transition at the forefront, there's a lot of hopes and dreams involved, right? Let's, to that point. Good question on the outcome of the elections. I think if Biden gets elected, nothing will change.
Yeah.
I have yet to review what Trump is going to do in that regard, but he's got a very pragmatic approach to things. My expectation is that he might ease permitting. I'm looking at Arizona. Maybe he'll help cut some red tape. Doesn't mean and he's never been against circumventing regulation. He's just always been for cutting red tape and maybe accelerating the process. So I think that's what we'll see.
Yeah.
Can he throw money at it? I'm not sure, because the US is in a massive debt situation. The budget deficit for this year alone is $2 trillion. He's going to be empowered starting 25, I believe. And does he have actually any room? He needs to refinance 17.
The election first.
I know, it's like I'm just, this is all hypothetical.
Yeah.
But him or Biden, they both have to refinance $17 trillion of bonds next year as well, or in the next 36 months. So can he? Can they? That's the question. So I wouldn't bet my house on him.
Paul, leave you last word. What are you looking forward to in 2024?
I think I'll go, obviously I'm very keen on copper, but I'll come out with gold. I think it'd be interesting to see as and when the interest rate cuts from the Federal Reserve happen, and what impact or not that will have on the gold price. Will that be the trigger that sends precious metals much higher and much higher for longer? And will that produce the sea change that everybody expects and hopes that it will?
Gentlemen, I know you both had a very busy Vancouver Resource Investment Conference. I appreciate your time. Paul, it's a pleasure working with you. Always a pleasure working with you. I look forward to doing it again in person. And Kai Hoffmann, thanks for dropping by.
See you in Frankfurt.